Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening, as we're here now on Wednesday, the 24th of September, 2025. You know, it was just a week ago that the Fed cut interest rates, but you wouldn't know it. If you looked at the futures markets or real yields, they peaked out on the 17th. In other words, they saw their low point, and they've been adding back slowly yield, which is sort of interesting. The other part that I'm watching, there's all kinds of rotations going on in the markets. You were down again today in Amazon, and as you know, the case is still going on there. I haven't heard an outcome of it. Netflix down another $14. Apple, after getting up to a high of $256 almost, backed off about $2. Home Depot continues to slip back. Restoration Hardware down. Google gave up. It's not a market where everything's moving in tandem back to the upside, and it is a market where you've got to be very careful on what you decide to buy here. The reality is some of these yields are so high, well, I shouldn't use the word yield, PEs are so high that it's gotten even the Fed's attention. Now, Fed Chair Powell did not say yesterday that the market is overvalued. He said it's highly valued. It's a play on words, but it's, you know, the message is there and you've got to pay attention to it. Metal markets are sort of stalling right here with the exception of copper miners. Now, let me explain what happened there. Freeport-McMoran announced today that one of their main mines is going to be basically 1/3 less production, maybe until 2027, off 2 people dying, a mud event took place, a lot of infrastructure damage to it, and they doubt it'll be back to normal in 2026. It's going to take a long time. Well, that's a surprise, but while their stock gets hit on it, because it's also a gold area for them, the other copper miners, you know, you saw today a dramatic jump in copper prices because of that, and that kicks everybody else up. So what's good for the group isn't always good for the person that caused the event, and in this case, that company. Uber, still very steady here, but holding on to the gains. And in the stock market, if you're down again tomorrow, I think the futures will have lost the upside momentum, turning down, and I could make an argument for next week, a correction into potentially 18-day average of closes. When we take a look at Copart, well, maybe we should go to the news of the day first tomorrow, and I think we should. Second quarter final look at the GDP. They're looking for all the numbers unchanged. Advanced durable goods report at 7:30, jobless at 7:30. They're looking for a reduction of about 4,000 to 235,000 claims. The Kansas City Fed President Schmidt will be talking at 8. Existing home sales data will come out at 9. Did you see the new home sales data? Up 20%. 20%. So it's a mixture of low mortgages. It was a mixture of what? The builders cutting prices on new homes. The mixture of that drove the traffic in. I didn't say it's as profitable for all the builders, but it drove the traffic. Now we'll see what happened with existing homes. Natural gas storage report at 9:30, and we'll get the KC manufacturing composite and business activity indices. They'll come out at 10 o'clock. So a lot of data, but I don't think market moving data out of any of these just yet. All right, let's go back to the chart action. As we talked about Copart, this is just the stall of a market that still acts like it wants to go lower. I don't see that change. I see the market coming down, so the gentleman that wanted this, no, you're just making lower lows all the way through. You don't want to be a bottom picker in markets like that. If anything, sellers will come out of the woodwork as long as you have momentum still pointing down, which it is at this point. The bias is down. You're running the Bollinger Band. You're moving to the right-hand side. But if you develop a bearish embedded reading, there's probably another ways to go on the downside. I'd be very cautious. Oklo, I've just been waiting. When's it going to give you a break? And it happened today. You were down 8% in one day. That's a heck of a break. I think you'd agree. So the market's setting back. It's so overdone. If you lose the embedded reading, that'll give us the opportunity to look at it at lower prices than this to start to get involved again. I admit this market got away right through here. We had started watching it. There was just It exploded. In Netflix, it can't get through that 18-day average. And until it turns itself around here, you're getting a combination where you could even get a bearish crossover where the 18-day average gets underneath the 100-day average. There could be more downside in this market. UNH, was that it, where it wants to pull back a little? Wouldn't surprise me. You're in overbought territory. Any reading with a 70 reading plus is overbought. In Home Depot, are we going to reach for the lower Bollinger Band? You're oversold, but this market has come down since the announcement of the rate cut. Just think about it. It's gone from $4.26. It's down $20. It's not a little bitty break. Robinhood, okay, still looking good, embedded. The good pullback on this market would still be in a buying mode, in my opinion. In Tesla, it just doesn't break. It stays with the embedded reading. You're liable to go through these highs and approach the 500 level here. Until this chart loses that embedded reading, I am in the bull camp still. In Joby, finally, you're getting the distribution of price against the upper Bollinger Band. I want to see a pullback, and you and I will be looking at that, potential buys. The financial services came down, and they turned the trend back down. You even closed under the 18-day average. Are we talking 52.98? You might be. Momentum down, bias down, trend down. In the industrial sector, you're having real hard trouble at the upper Bollinger Band. It's the first time it hit it. Wouldn't surprise me if it pulls back to the 18-day average to get its feet back under it. In XLE, all the energies took off. Now, if you were to ask me, did I see these energies taking off? No, not at all. But maybe the market's feeling, with all the sanctions going to hit Iran on Sunday, and how the president's turning now on Russia, that supply chain could be threatened in the near term. I think you have to consider that. For Iran, they have stopped the nuclear inspections. The Ayatollah today said he will not make peace with the U.S. or Europe over this. They have the right to blah, blah, blah. And of course, Iran at the UN today talking about how the U.S. and Israel, how they attacked them, that wasn't deserved, and it's a criminal and all that. Of course it is. So you've got that happening, and that's the only thing I can hang my hat on. Now, the supplies, when you look at the API and EIA numbers, they have been coming down, so that added a little bit to the market. Gold got up to the Bollinger Band yesterday, turning back. If you lose the embedded reading, which I want to happen, I can make an argument this market's going to start slipping back. I don't know that I'd go rushing in to buy any of the metals right here. I question, have they gone up high enough where the profit taking is going to happen? It'll depend on momentum. The copper miner's strong, but you got a fundamental situation now kicking the miner stock up. When we come to BND, I'm going to repeat to you, this is when the market got the rate cut. Look at what's happened. And that's why I'm saying all of the interest rates, they're not roaring, but they're not breaking. They're adding yield right across the yield curve. The dollar today took off to the upside. You could be going back to the 27.60 level as the euro got hit and it's back into the bear trend. Again, could that be a play on what the market's saying, that interest rates really aren't breaking at this point in time? I'm Ira. Take a look at the other videos tonight. I hope you do that. I'll catch up with you in the morning in my morning flash video. You have a great evening.